Hey traders, Michael or Minifrost here. You're here for another episode of Common Sense Market Analysis. Today is Monday, December 1st, 2025. You're looking at a daily chart of the SPY or Spiders, which is the proxy for the S&P 500. What do we have on the docket today? Well, first things first, I hope each and every single one of you had a great Thanksgiving. I hope you got to eat some good food, spend time with some family, and certainly enjoy the extra long weekend. By now, we should all be recharged, in uniform, and ready to go. So with that said, let's jump straight into it and start with the S&P. Today. So before we go into what happened today, let's go over quickly what happened last week. So this candle right here was the start of Thanksgiving week on Monday, and if we pull up the volume down below, we can see that we did have a decrease in volume. So we did have a lower volume / lower participation type of tape that week. Therefore, Mrs. Market just kept floating them up higher. We're calling it a Thanksgiving floater. Generally speaking, the market does like to float them up higher into these holiday weekends, which is pretty much exactly what you saw last week. And in addition to that, we even blew by a very important destination, which was right around a big fat round number at 675. We were talking about that number pretty much all last week. It was important for a few reasons. One, it's a big fat round number at 675. We know that the markets are generally attracted to those numbers. We also had a big time breakdown candle high, the biggest one that we see on the screen. That generally is going to be some overhead resistance, at least from a first time best time situation. In addition, if we grab a fib tool and take the all-time high and then take it down to this low right here, we can see that that area fell in line with a 618 retrace. And then also you had some other stuff. You had some moving averages on different time frames converge. But in conclusion, that was an important area. And because we had that Thanksgiving floater with lower participation, we pretty much just floated right above that area. But we'll give it a funny how that works, that right here on Tuesday the 25th, the close was exactly 675.02. We closed at that number for a reason. And then the following day, the day before Thanksgiving, we had a little bit of a gap and go situation. Gapped up higher above that 675 number, and then pretty much just floated them up higher. So the reason why I'm bringing this up again is because despite the fact that we blew by that area the first time around, that doesn't mean that this area is totally out of the question. It doesn't mean it's less important now, because you hear me say this time and time again, that despite the fact that we blew by certain areas, such as this one for example, that doesn't mean the market can't come back into that area and potentially use it as support on the way back down. We see it all the time in Inside the Numbers. We talk about it in the live room almost every single day. So just because we blew by it last week doesn't mean it's not important anymore. You do have some things going for you near that area. Number one, this is now a gap, and the gap happens to be right at the big fat round number at 675. The exact number is 675.02. Also taking a fib tool from this low, and we're going to attach it to this high right here, assuming that that is a pivot high, which technically right now it is. Tomorrow might be a different situation, but for now that is a pivot high. And that area, the 675, happens to coincide right with a 25% retrace. Not to mention, you do have some moving averages down below. You got the 20 and the 50 right below it. And just a quick glance, we can see that we are a little bit extended from home base. And those two moving averages can possibly converge, making the situation even better. And then obviously, you have this breakdown candle high that can now be utilized as support on the way back down. For example, look right here. This was the other breakdown candle that we see on the screen. We got above it, and then as we came back down into that number, you can see right here, we did utilize it as support. Going over to a 15-minute time frame, just getting a different perspective of this, you can truly see that that area is important for the market. It's magnetic. From right here, we did come down into that area. We fought it for a little bit, used it for some initial support, and then we did come back down, but then when we came back up into that number, we utilized it as overhead resistance. Right here, again right here, and then we had another leg lower, a little bit of consolidation right here, but then right here, the 19th of November, we had this huge gap up higher, and then what did we do? We found overhead resistance right at the 675. Coming into Thanksgiving week, on Tuesday right here, we closed right at that number. But since we were in a little bit of a different situation, some different circumstances with the holiday weekend, and a lower participation type of tape, we floated up higher, getting above that area. So in conclusion, we can now make this, the 675 number, a short-term pivot number, a shorter/medium-term pivot number. it's not out of the question just yet. I do believe that this is an area where we should be able to retest it towards the downside, and it can now be utilized as support on the way back down. Take a look at this on a 2-hour time frame. You got the possible convergence between the 100 and the 20, and then you also have a convergence down here between the 50 and the 200. This right here also happens to be another important area, right around 670 give or take. That's another big fat round number. So we're obviously going to have these numbers ready for Inside the Numbers and live room members. There could be a potential opportunity at play. Real quick, today is the last day of the Black Friday special we got going on. This is the first ever Black Friday deal that we're doing. We have a discount on Inside the Numbers and the MSF Masterclass. There's only limited spots available. As you can see, there's only 3 remaining for the Masterclass, and then about 12 left for Inside the Numbers. And today is the last day, so these are definitely going to be gone before the night ends. And just as a little sneak peek, if we go into Inside the Numbers, we do have a new feature, a little update within Inside the Numbers. I have a video explaining it on the page. The link will be in the description below. So, Black Friday deal coming to the end, limited spots available. It will be gone by tonight, so you better get on your horses. Only 3 spots left for the MSF Masterclass, where you could get lifetime access to the Magic Calculator. These are 2 deals that you definitely don't want to pass up. So going back over to the spiders, this is just a little bit more information, a little bit of food for thought, take it as you will. But if we grab a trend line and take it from the previous all-time high right here and attach it to this lower high right here, and then we could extend it out a bit, we can see that we do have a trend line formation. And the market certainly knows about that trend line. But here's the thing. Obviously, this trend line is overhead resistance on the way up. But we did have a different situation last week. Again, Thanksgiving floater. So it's not totally unusual that we did blow by that trend line and got above it and then started to use it as support on the way back down. As you can see, right here, again right here. Today, we opened below it, but did fight back above it and close candles above, so that trend line is definitely being utilized as support. This is an important trend line that we need to take note of. But if we start to get below that trend line and possibly close candles below, then that supports the case even more that we might need to go down and complete some unfinished business, and especially that 675 number, which is a gap now. And then one last thing before we move on. This is something that caught my attention in the morning, but what I do see in a potential pattern formation is a possible inverse head and shoulders pattern. Or you could call this a W pattern, whatever you want to call it. There's a few different ways that you can look at this, but in my perspective, I'm looking at this being a little bit of a head and shoulders pattern. Right here, you have the left shoulder, and then this big move down is the head. And then if we do go back down, possibly to that 675 or lower, this would be the start to the right shoulder, possibly find some support wherever it might be, and then come back up, and then that completes the head and shoulders pattern. And then if we do get to that point, this is kind of a hypothetical situation, but it's good to kind of point these things out a little bit earlier because they do present some trading opportunities. But if we do somehow formulate the right shoulder, and then right here you have the neckline, depending on how we close candles, either above or below that neckline is going to present an opportunity. But again, this is a little bit food for thought. I see it as a possible head and shoulders pattern forming, an inverse one. Some might see it as a W pattern. Whatever you want to call it, there's different perspectives about all of this. This is what makes a market, is that multiple traders have different perspectives on these types of things. But if we do get the start to the right shoulder, and again, that trend line that we formed earlier, if we start closing candles below, then we have more of a reason that we need to head down lower to complete some unfinished business down below. We'll keep this on the back burner for now. What's most important is how we treat that trend line, closing above or below. If we start to close below, then we already know what the next destination down below is going to be. The main one being the 675. We're going to have some other destinations that we have to get through first, but we're going to save that for Inside the Numbers and live room members. So let's go over to Inside the Numbers, starting with the 0 dark 30 notes. This is the morning game plan that's laid out to members well before the opening bell. As you can see, we had a ton of morning notes today, but scrolling up, we can get a condensed version of that. What's the scoop for today? We had a morning pivot at 676.70. Never quite got there, so we don't need to worry about that. We had our first support number at 678.15. Never quite got there. We don't need to worry about that. But then we did have the first overhead resistance number at 679.70. But then if we scroll up a bit, we can see 679.70 is the first overhead resistance number. She could come up a bit short of that number because there is the trend line right in front of it. So to the right of the vertical line is today's activity. This black line represents the trend line that we were talking about earlier. And then this red horizontal line represents the first overhead resistance number. at 679.70. So as you could see, on a 1 minute time frame, we went right up into that trend line area and then came right back down, spiking the low and then ripping it right back up. So in the notes, I do mention that we did come up a bit short of that number, which is a first time best time situation. The second time we come into that number now, the trade is different. It takes the luster off the trade. So then at 9:36, not looking to trade 679.70, going to exercise patience and wait for another opportunity. What was that other opportunity? The next overhead resistance number in the sequence at 681.20. How you doing? We could get rid of this trend line. We don't need that anymore. As you can see, the high of this candle is 680.31 against our overhead resistance number at 680.20. Came right back down and provided a nice trade. And also you can see the importance of that number. Obviously from this trade that we had very early on in the morning, and then once again right here, and then towards the end of the day, pretty much eating time off the clock at that area. It pays to know your numbers. And that's what you get with Inside the Numbers. You get the entire morning game plan with all the numbers that you don't have to guess anymore. You know exactly what to expect before the market even opens. And then you have all the intraday updates. As usual, you can pause the video, go back to the chart to double check the work. And then towards the end of the day, we have an afternoon write-up. So you know exactly what to expect when the morning session ends. With Inside the Numbers, you also get stocks on the move. Today, unfortunately, we didn't have any. That's just how it is sometimes. We like to prefer quality rather than quantity. We didn't have any opportunities that stood out at us, so we didn't put any on the board. Some days we'll have 3, 4, 5, even 6 stocks for stocks on the move, and some days we'll have 0. And today was just one of those days. And then also, not to mention, we have a list of 14 different markets with support and resistance numbers, now including Nvidia. We have an opportunity around the corner for everybody. It's not just the spiders. We got Qs, IWM, SMH, Tesla, gold, crude, Bitcoin, Nvidia, natural gas. We have something for everybody. Now let's take a quick trip around the world and take a look at some of the other markets, starting with Camp IWM. Today we're up about $1, 0.42%, and just like the spiders, notice the low volume down here, but at the same time continuing to float them up higher. And just food for thought, could this be a potential inverse head and shoulders pattern? Right here you have the left shoulder. This big move down and this big move up represents the head, and then could it be that we have to take care of some unfinished business down below and start the formation of the right shoulder, and then potentially come back up? And if we do, then that creates the neckline right here, and then obviously depending on how we close above or below the neckline will be a trading opportunity. We'll get there if this pattern does play out. We're still missing one of the key components of the pattern itself, which is the right shoulder, but I do think it is doable just because we had that floater situation last week blowing by very key areas that generally speaking the market shouldn't be able to just waltz right through. So going back to test those areas and potentially using it as support on the way back down is a potential play at hand. We could also draw a trend line, extend this out a bit. We haven't reached it quite yet, but that is something to keep in the back of our minds. If we do get back up here, that is going to be some initial overhead resistance and potentially a place where the market shouldn't just waltz right through. It also happens to fall in line right around a big fat round number, a very important one in that matter, at 250. We do have some areas that IWM blew by last week that they might want to go back to retest, and we're going to have those numbers ready for Inside the Numbers and live room members. We do have some stuff going on in the transportation department. We're up 0.02% today, so pretty much a nothing day. I did list 2 overhead resistance numbers last week. This did create a zone of overhead resistance, and as you can see, we did come up a little bit short. And then where did we come right back down to? 16,500. If you remember correctly, that was an important number. We used it as overhead resistance right here, and then now we're back above that area, and now closing candles above. Take a look at today's low. The low is 16,493. We'll give that a funny how that works. Just looking at this in a technical analysis perspective, we are in a very bullish position. We're above all the moving averages on the daily chart. Taking a look at the weekly chart, it's a little bit messy, but you can see that we are still above all the moving averages. We did have a triple top scenario at that 16,500 number, number 1, number 2, triple top number 3, sell off from the third top right down to the pivot, and now with a little help of that Thanksgiving floater, we're back above 16,500, closing candles above, still testing this number, seeing if we can continue to close candles above, and then also the overhead resistance zone up above, which we already came up short of. So now we could either spike on through, possibly get to the midpoint or the back end number, and we got to see how we treat that zone. But from a technical analysis perspective, we are in a bullish situation in my second favorite market leading indicator. What about the Q people? We're down 0.34% today. Pretty similar situation to the spiders. We did float them up higher above an important area in the Qs. We said that around 610 was an important area near the high of this breakdown candle at around 614, give or take. That's an important area. And right now we're still closing candles above it. But those areas in the vicinity are going to be important still. Clearing those lines, we can make a new line right at this gap that happens to coincide right with the 50 period moving average. The 20 and the 50 might converge, so we'll keep an eye out for that. That number comes in at 608.89, so that's the first main destination if we head down lower. And then another key destination for the Q people is going to be right around 595. Again, give or take. It's this breakup candle low. It also happens to be the entrance to no man's land. There's some space in between the low right here and then the gap down below, which is another destination at another big fat round number that happens to coincide with the 100 period moving average at around 590. We're a little bit far away from it right now, but I would certainly write those numbers down on a sticky note. On the flip side situation, because we are the umpires calling balls and strikes, we do have some unfinished business towards the upside. This gap right here at 621.08. That is going to be some initial overhead resistance, but take note that we did already come up a little bit short. So it wouldn't be a total shocker if we spike them through a little bit, maybe get towards the high of this candle right here where there was natural overhead resistance for the market. If we put a line right at the high of this candle, that happens to be at around 624.84, call it 625, nice big fat round number. And you could see that the market was certainly attracted to that area. Obviously attracted right here, again right here. After this gap up higher, we opened right at that area. Later on came down into that area from this candle right here. Came up a little bit short, but certainly that area is important for the market. And it shouldn't be a place where we should just waltz right through. We're pretty much creating a zone of overhead resistance with those two numbers up above. Obviously, intraday for tomorrow, we're going to have numbers ready for the Q people. What's going on over at XLF? We're down 0.83% today. We're pretty much toying right around the 100 and the 50 period moving average as they now have recently converged. We're still in a decently strong technical perspective above all the moving averages on the daily chart. Taking a quick look at the weekly chart, we're playing around the 20 period moving average. Still, as you can see, we have been eating time off the clock around that area, around home base. A few weeks ago, we did go back down to retest the 50 period moving average on the weekly chart, but we did find support at that area. XLF wasn't going to give up that 50 period MA on the weekly time frame that easily. If we did, things could have shifted a bit and could have induced some fear amongst people, because when we get below the 50 period MA, that's when people, more so money managers, start to get a little bit nervous and could potentially start exiting some positions. But as you can see, we did find support at that area, and now we're playing with home base. So really no major change in XLF. Last but not least, we got SMH shaking my head to semiconductors. Smash mouth. We're up 0.19% today. Take a look at the high today. The exact high is 355.01. We'll give that a funny how that works. The market is attracted to those big fat round numbers. Right here is a gap that we did miss. Came up a tad bit short, a few cents short. That number comes in at 355.53, so that does now become some unfinished business. As of right now, we are above all the moving averages, so the trend is your friend. We are bullish. But obviously, coming off from the Thanksgiving floater, things can change with the snap of the fingers. We could potentially get down to the entrance to no man's land right around 343.43. That's going to be a bull-bear battle, also have to coincide right with the 50 period moving average. And then the reason why it's the entrance to no man's land is because you got some empty space and some room before you get down to the next destination being this gap right here at 340, big fat round number. That will be an important destination for SMH. On the flip side, if we do come back up, go ahead and fill this gap right here that's now unfinished business. you do have another gap up above that's at 358.79, coinciding right with a big time breakdown candle high. And again, I don't think that's going to be a place where the market should just waltz right through. That will be the next destination if we go up higher and complete this gap right here. We can draw a little bit of a trend line. As you could see, last week on Wednesday, we came up a little bit short of that trend line and bounced away from it. But then as of right now, we're still closing candles above and utilizing it as support on the way back down. Looking at it on a 15-minute time frame, today's open, we were playing right at that trend line, just like the spiders were, but we did eventually close candles above and stayed above. That was the bull case scenario. So later on this week, we got to see how SMH reacts to that trend line, whether we're closing candles above or below. Have I told you guys how much I appreciate each and every single one of you? Without you guys, these videos or MSF would not be possible. That is true and accurate information. Put it on a sticky note. We're pulling the ripcord for today. Thank you all so much for tuning in for another episode of Common Sense Market Analysis. I'm 𝘰🔻Frost. Please don't forget to like, comment, subscribe on the video as it helps me and the channel out a lot. Black Friday special is coming to the close. Today is the last day, and those limited spots that are available right now will be gone by tonight. The link will be in the description below. With that said, I hope each and every single one of you has a great rest of your day. Stay safe and take care now, folks.